Get more now, though, on the markets. We're joined by Chris Conway from the Australian Stock Report, live from our Melbourne studio. And Chris, we might kick it off with that Blackmores result, because it's been the whole sector has outperformed, and that's certainly, no one will disregard that, over the past 6 to 12 months. The question is growth going forward, isn't it? And whether valuations are getting a little rich. Where do you stand?
Good afternoon, Ingrid. Yeah, look, certainly it's about growth moving forward. I think with Blackmores, though, they've got a pretty strong track record. They have continued to deliver. Today's numbers are more evidence of that. At this point, I don't see why you'd bet against them. I also like the fact that they can bring products to market very quickly. They recently teamed up with Bega to produce some infant formula, and they brought that product to market within 10 weeks. So they're growing, but they're also nimble. And if they can manage their supply chain properly, there's no reason why they can't continue to meet that demand coming out of China. So I like the story. I think the issues around the regulatory changes or potential regulatory changes in China regarding food imports are a little bit overdone. I don't think they're as big a concern as maybe they're being made out to be. And that's simply because history shows us that when demand for something is strong enough, obstacles will be overcome. So
would you sort of paint the whole industry with the same brush?
No, certainly not. I mean, someone like Blackmores, who's had an even more meteoric rise than Blackmores, but hasn't been doing it for quite so long. I think it's a company like that that needs to get some more runs on the board before it can justify the multiples there. So, you know, you need to be selective in the space, but I think Blackmores is the strongest, and I've been saying that for a while now.
Let's talk SEEK results today. Strong numbers following what you call a pretty tough period. What's next for SEEK?
I like SEEK. I think they're back. The big highlight is the international revenue growth, 34%. Not to be sneezed at, of course, is the Australian and New Zealand revenue growth, which was 15%, also very strong. But they've got operations now in many countries, China, India, all throughout Southeast Asia, Bangladesh, and these are growing regions where internet usage will pick up and jobs markets will continue to grow. So I think they've righted their ship. I wouldn't be surprised to see this stock kick on in the next couple of days as we get some analyst upgrades.
All right, we'll watch that one, and certainly the stock is soaring today. It's up by about 5.5%. Another stock which is doing pretty well today is South32. It's up by 5.1%. Now, obviously, as you'd imagine, given the fall in manganese prices, and it's very much exposed to that sector, it has been cutting a lot of costs. It's announced job cuts. Is the efficiency drives going to be enough for South32, though, when commodity prices are where they are?
No, it's definitely going to be about the outlook for commodities and how commodities fare over the next 6 to 12 months. The cost out story, you know, South32 is doing what any good commodities related company should be doing at the moment, and that's manage costs. They've cut their capex from 550 to 150 million. 700 jobs are going to go. There's no dividends, so they're shoring up their balance sheet. They're doing everything that a company in this sort of environment should do. But again, it will be all tied to how commodities fare over the next 6 to 12 months. So if they recover, obviously that will see South32, or should see South32 appreciate strongly. But that is the overriding and dominant factor, is how commodity prices fare. So cost out story is good. They've done all their write-downs. They're seemingly in a good place, but if commodity prices don't bounce, well, they'll be not much better off than they are today.
They're known well for their minimal net debt, though. That's sort of one of their calling cards, and there is talk that there could be takeover speculation for this one if the share price falls enough. What do you think about that, and who might be interested?
Very good question. I mean, we're operating in a depressed environment now where the share prices of all major commodity producers around the world have come off sharply. There's certainly still some players out there that have very strong balance sheets. But again, I think we're not quite at the acquisition stage of the cycle just yet. I mean, we saw, who was it, Shell take over BG Oil. At probably the wrong point in the cycle. You know, 3 or 4 years out it'll probably look okay, but right now I don't think it's quite just at the point in the cycle where anyone will be taking too serious a look at acquiring someone like South32. But again, if commodity prices begin to recover and there's evidence of a pickup moving forward, then that's when it would become attractive. Net debt, as you say, down 300 million on today's results, which is good.
All right, we'll leave it there, Chris, but appreciate your insights. Thank you.
Thanks, Ingrid.
Chris Conway there from Australian Stock Report.